Welcome back, my friends. Tesla is suddenly cutting vehicle prices. Price cuts are taking effect in the US and Europe. Tesla is trying to rejuvenate sales after lackluster year-end deliveries. The move in the US may help Tesla qualify for more federal EV tax credits. Tesla needs to stoke sales volume in the United States and abroad. The electric vehicle maker is facing stiffer competition and interest rates increased. If you follow stocks, you probably know that shares of Tesla have been falling pretty much all year. And where has Tesla CEO Elon Musk placed the blame? Well, if you follow this channel, you already know who he blamed. He blamed the usual whipping boy, deteriorating macroeconomic conditions. If you recall from the many disappointing earnings calls, you probably remember that basically every CEO has placed the blame there. Many observers think that Musk's acquisition of Twitter has distracted him. Tesla stock has underperformed as compared to other automakers in the benchmark S&P 500 index. Meanwhile, Tesla has been taking aggressive actions to improve sales and operations, offering discounts and incentives to improve sales, working to improve efficiency in new factories in Texas and Germany. If you recall, in Q3, Tesla delivered 365,000 vehicles. That compares to 258,850 vehicle deliveries in Q2 of last year. That was an improvement, but somewhat disappointing to Wall Street analysts. So, what does this mean for Tesla? What does it mean for the economy? And, what does it mean about the future of the United States? But, before we get into all of that, please press the like button and leave a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. You heard it, my friends, electric vehicle maker Tesla is cutting prices. Price cuts are taking place in the United States and throughout Europe. According to listings on the company's website on Thursday night in the US. Tesla did not comment on what motivated it to slash prices this week. Wall Street analysts suspect that price cuts may help Tesla qualify for more federal EV tax credits. Tesla needs to boost sales. Higher interest rates are taking a bite out of sales. In Europe, Tesla cut prices on its Model 3 and Model Y vehicles. In Austria, France, Germany, the Netherlands, Norway, Switzerland, and the UK, Tesla cut prices on the Model 3 and the Model Y from 1% to around 17%. Tesla's Model 3 was the best-selling electric vehicle in Germany in last month. The Tesla Model Y was second. Those two models outsold Volkswagen and its popular electric vehicle the ID.4 in Germany. With the new discount, Tesla's Model 3 is priced comparable to Volkswagen's ID.3. The price of a new Tesla Model 3 in the US has dropped between 6% and 14%, depending on configuration. Tesla cut the price of the Model Y by 19%, also depending on configuration. The Model 3 is Tesla's entry-level sedan. The Model Y is a sport utility vehicle or crossover. Tesla also cut the price of its Model S sedan. The Falcon-winged SUV Model X has also seen its price lowered. Generally, electric vehicles qualify for tax credits in the United States, depending on a few factors. Their form factor, the category they fall into, their efficiency and range, and the manufacturer's suggested retail price. The U.S. government is expected to set new rules about sourcing of raw materials and battery components. A $7,500 clean vehicle tax credit until at least the end of March 2023 is at stake in the United States. As things stand right now, Tesla, and other EV makers, can buy parts and critical minerals from anywhere. And they will still qualify for some EV subsidies. Under the current, interim rules, electric vehicles need to complete final vehicle assembly of their electric cars in North America. The latest round of discounts by Tesla are designed to capture EV tax credits in the longer term. But customers who just took delivery of Tesla vehicles at the end of 2022 paid higher prices. And, as you can imagine, they are upset and feel duped. Tesla also enraged customers in China by slashing prices on its Model 3 and Model Y cars. That came after many customers had agreed to take delivery at higher prices before December 31st. Some of the customers staged protests and demanded rebates. But Tesla has not relented, at least not so far. In late December, Tesla discounted its Model 3 and Model Y cars by about $7,500. The goal was to entice customers to take deliveries before the end of the fourth quarter. Tesla also gave some U.S. customers 10,000 miles worth of free supercharging. Tesla reported deliveries of 405,278 vehicles and production of 439,701 vehicles in Q4. Wall Street analysts expected 50% in annual vehicle delivery growth over several years. Tesla missed that goal and Wall Street analysts' expectations in the fourth quarter. Tesla now operates 4 vehicle assembly plants worldwide. In Fremont, California. A newer one in Austin, Texas. Its first overseas factory in Shanghai. And the newest one in Grünheide, Germany. Wall Street analysts expect much higher in 2023 than in previous years. But some bearish analysts are concerned over a possible demand cliff. Tesla is now facing headwinds. More competition. Higher interest rates. And slower consumer spending than in recent years. Bernstein analysts wrote, "We believe that many investors underestimate the magnitude of the demand challenges Tesla is facing." Bernstein has an underperform rating and price target of $150 on shares of Tesla after the company's share price declined in recent months. Tesla CEO Elon Musk sold billions of dollars worth of his Tesla shares in 2022. If you recall, Musk led a leveraged buyout of Twitter for around $44 billion. Musk took over Twitter and appointed himself CEO in late October. Since then, he has been distracted. He has been splitting time between Twitter and Tesla. And sharing some resources between the social media business and his electric car company. Tesla plans to report its 2022 fourth quarter results on January 25, 2023. They are expected to share their new outlook for the year ahead at that time. Shares in electric vehicle leader Tesla reached a new 52-week low recently. Shares in Tesla closed around $138 per share on Tuesday. CEO Elon Musk is blaming the usual whipping boy, deteriorating macroeconomic factors. But Tesla's stock has fallen more than other larger automakers. Stocks are down precipitously since Musk announced his plans to buy Twitter in April. Tesla shares are down 59%. Shares of Ford are down 26%. General Motors stock is down 12%. And the benchmark S&P 500 is down 14%. Don't forget, Elon Musk is also the CEO of SpaceX, which is a major defense contractor. Musk sold $3.6 billion of his Tesla holdings to finance the Twitter deal. According to Musk, he sold Tesla shares to save Twitter. If you follow this channel, you already know that Musk cut more than half of Twitter employees. "I won't even entertain the idea that my behavior impacts the stock price," responded Musk in a tweet. "Maybe so, in which case, buying opportunity," Musk replied on Twitter. "If you follow this channel, you already know that I have likened the economy to a soufflé. The top is starting to collapse down onto the bottom. That the bottom is solid and getting denser as the top collapses onto it. And by top, I mean luxury goods and consumer discretionary items. That includes luxury homes. It also includes furnishings for luxury homes. Remember my video about RH last week and how the RH CEO gave Wall Street analysts gloomy guidance? That is because RH sells luxury goods and caters to high-income earners. And many of those people are high-paid tech employees. Probably, many of those people had a large share of their money in speculative investments. Shares of unprofitable tech unicorns. And probably cryptocurrency investments. My friends, a Tesla is a luxury item. So, it does not surprise me one little bit that Tesla executives are starting to feel the pain of the deflating soufflé. Of course, Tesla cars have positive environmental value. So, you might say that buying a Tesla has more meaning than just as a luxury item. Many people consider it a price that everyone in society will eventually have to pay to face climate change. But as things stand right now, a Tesla is right there with a luxury home at the top of the deflating soufflé. In 2021, Tesla had only the Fremont, California factory and the Shanghai, China factory operating. Now, Tesla has the Giga Berlin factory and the Giga Austin factories up and running. Although the new factories are not really up to full-scale production yet. And, the Shanghai Gigafactory has been beset by COVID lockdowns that have hobbled the Chinese economy. Production of the more expensive Model S and Model X vehicles is up by more than 100% as compared to Q3 of 2021. Last year, Tesla delivered only 8,491 of its S and X models during Q3. The Model S and the Model X are the more expensive stylish sedan and the SUV with Falcon wing doors. Tesla has had to deal with skyrocketing commodity prices during 2022. There has also been a good deal of employee turnover. Artificial intelligence team leader AI leader Andrej Karpathy left the company in July. There have also been some severe growing pains at Giga Berlin and Giga Austin. But Tesla still faces headwinds from many directions. But, what do you think? Please leave a comment below and press the like button. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.